Hey, welcome to the 40 Finance channel, everybody. My name's Jeff Beers. Today we're going to look at what has become my falling knife portfolio here as the market continues to go down and down. In fact, today, as I'm looking at the board, the NASDAQ after the Fed meeting is down 4.36%. If you're a regular viewer, you know that I'm big on NASDAQ stocks, QQQ, TQQQ, all those things. So suffice to say, today is not a good day for me. And when it comes to my channel, I get posts all the time about, do the opposite of what this guy says. Why are you still posting even though your stocks are getting decimated? And the truth of the matter is this channel has never been about private memberships and selling stock picks. This is literally a documentary about the things that I see as someone who's very passionate about stock research and who has enjoyed investing as almost a hobby. And when it comes to downturns like this, frankly, I'm not super surprised. This is part of the game. This is part of the ebb and flow of investing. And if you planned on running a channel like this or a blog or writing a book about your stock portfolio, if you're planning to do that over the long term, 3, 5, 10 years, then you can pretty much expect that you're going to have time periods like we're in now where the stock market goes down. So as far as I'm concerned, nothing's really changed with my channel. I will continue to post updates like we have today for the falling knife portfolio. And some people will laugh, some people will find interest. Some people will maybe learn from many of the mistakes that I have made. And the bottom line, though, is that the final grade won't be passed out on any of our portfolios until we cash out, which in my case is going to be certainly several years from now. All right, so let's take a look at the stocks I own through the lens of Seeking Alpha. This is a connection that I have set up with my portfolio over in Ally Bank. By the way, if you are interested in learning more about Seeking Alpha and some of these great tools that we'll be looking through here today, my affiliate link is in the description and gives you a substantial discount when you sign up. So definitely check that out. Now, I've sorted today by total value of each holding. That's not to be confused with the price that I paid. You can see the total change here gives you the percentage of how much I bought in versus what it's worth today. And right at the top, as I've talked about many times, QQQ, this is something that I actually started building in November, but I did not buy it all at one time, right? I have 46 shares, cost basis of $364. So all the damage that's been done to the Qs, I am down minus 13%. And I think the total damage for the Qs from peak to trough right now is over 20-some%. So this is a good lesson here in terms of dollar cost averaging and what you can do to kind of minimize your losses if you believe in an asset for the long term. And for the Qs, I think that's pretty much a no-brainer, certainly over the next 5 to 10 years. Next, we have Visa, which is another one that I've averaged down when it's been in its low periods. I got 65 shares. My cost basis is $190. Visa had a terrible 2021, and frankly, I was just surprised at how bad it really was. But we're seeing Europe open up. We're seeing travel open up. We're seeing business travel open up. All good things for Visa. And I am up a meager 9.35% on that one at about 13 grand. PayPal, which is, basically the personification of everything that's wrong with my portfolio right now. I'm in at 168 after some aggressive dollar cost averaging. I think that during the peak of the hype train, my dollar cost average was 185, 189, something like that. I now have 125 shares, and I am down minus 50%. Okay? Zillow. This one is one that I knew was going to go through some tough times as the housing market was at, basically peak enthusiasm. $39 today. I'm at 67. Could take Zillow a couple years to turn everything around. We'll have to see what really happens in the housing market. We know interest rates are going up, but that's only one piece of the pie. You also have housing prices, so that'll be interesting. But Zillow, for me, I will add more shares throughout this year. But right now I'm at $67 and I'm down 41%. Next, we have TJX, which, to give you another lesson about investing, TJX is one that I think the last shares I bought on this one was during the pandemic when stocks were down significantly. So during that time, I built my share count up to about 100. I'm at $48. TJX should have a really, really good year as a discount retailer, and I'm up 28% on that. So as you can see, if you preview ahead of time, we've got two tickers that are positive. The rest are negative, okay? So plus 9%, plus 28%. Luckily, for the total value of things, they're in the top 5, but I'm still underwater, absolutely for sure. In fact, just to go ahead on that, it's minus 31% in Seeking Alpha. But the one thing I didn't do to prepare for this video, I didn't add up all my dividends and also some of the things that I've sold for a profit, like Etsy, Molson Coors. I think both of those I sold this year. So I'll have to go back and get that ready for the next portfolio update. Next up, we talk a lot about TQQQ, right? In this environment, here's where I stand today, 126 shares. I actually did buy a couple more today because the Qs were down 4 or 5%. Cost basis of 46.61. I am down 20%. So there's another dollar cost averaging story for you to think about if you're struggling with the market right now. The TQs are down a lot more than that year to date, right? Because they're triple the downturn on the regular Qs. However, as I talk about in my videos, I have continued to add on the dip. So minus 22%, that's not great, right? That's not going to make anybody happy. But at the end of the day, I'm sort of managing the flow on the way down. And if I get lucky and things bounce back up, then we'll almost for sure be in the green on that one. Magnite just came out with a great earnings report. A lot of excitement for the future, with the future being 2023, 2024. Very happy with Magnite's management. I got 400 shares at $20. Again, DCA Central on this one, down 46% at $42.88. Square, similar to PayPal. Square, I have not averaged down at Square. Okay, so I bought Square as a hedge on PayPal because of Cash App versus Venmo, and I just really wanted to own them both. 40 shares, $217, minus 55%. Let me check. That's right up there as my top loser. But I will say with Square, I should probably at least add a few shares here to get this dollar cost averaging in motion, because frankly at $96, it just makes sense, or else it's going to take forever to get above water on this one. Rocket Mortgage, just like Zillow, the home market right now is very sensitive. I should say home stocks are very sensitive. 2022 doesn't look like a very good year for a mortgage company. However, with Rocket, they do tend to send out some special dividends like they did at the beginning of this year. I'm at 1824. This will be one that I probably have to think about more as we head into the end of the year if I want to do any tax losses, but I'm not worried about it right now. However, I'm not sure that I'd be super pumped about adding more here. We'll see. If I added more, it would be, small lots of 10 shares, something like that, but I'll just have to think about it. I will tell you that Rocket as a company is the #1 mortgage originator in the United States. That's a pretty strong statement. and I do think that the long term for them is good. I just have to follow and see how the summer housing market is going to go. All right, next up we got DraftKings, another huge loser. This not as bad as Square, but minus 50 some odd percent. $14.70 is where you're at today. I'm at 33.11. Okay, 33.11. This is one, I'm at an oddball number here, 230 shares. I should probably just go ahead and round that up to 300. I probably will do that between now and football season in September. I still believe in DraftKings. Everything about them to me is exciting for the long term. And I believe MGM, I think it was MGM, just came out with an article where their CEO says, profitability in the sports gambling market for that company should be in the neighborhood of 2023, if not the beginning of 2024. Now, that doesn't mean that DraftKings will follow the same suit, but I can tell you that we're here where I live in Ohio. We're crossing our fingers that market opens up before the end of the year. So I still think there's a lot of positives in the online gambling space, and that's right where DraftKings sits. All right, Palantir. I'm at $20. This one's at $10. I still like Palantir. Nothing really changes on the way I look at that company. I should probably think about trying to lower my cost basis while it's at $10. This is software, contracts, etc. I expect compounding returns out of Palantir, certainly over the next 3 to 5 years. All right, next we have KWeb. This is Chinese internet stocks, which have obviously been absolutely blasted. I'm only down 12% on KWeb. I'm in at 30. It's right now at 26. So I did wait. I'm not particularly fond of Chinese stocks for all the reasons that we already know about. However, for me, it finally got to a point somewhere maybe in March where they got dinged again. And I was like, you know what? This is just too low. This is just too low to ignore. And just like I like the NASDAQ, you've got to give a hand to some of the Chinese tech companies. So I bought in, but I'm only at 69 shares. I will almost certainly land at 100 shares before the end of the year. But I'm going to keep watching the news, and we'll see what happens there. Last one here is Sabre. I got just my heart ripped out on Sabre this week in the sense that it's at 888. Travel stocks, for some unknown reason, are falling this week, despite a fairly good report from Sabre, who basically confirmed their guidance and gave very specific percentages for what kind of upside they could see over guidance. I was shocked that they went down after that, but it's $11 where I'm at. It's only 200 shares, but I'm down 20%, and I sort of expected Sabre to probably get to the $12, $13 range this week on the good news, which they did deliver. However, this is the market that we're in, right? So it looks like I'll have to hold Sabre for a little bit longer. This one is probably not the longest term hold for me. I don't know how long it'll take to get up into, let's just say, plus 30%, plus 50%. That's probably the realm that I'm looking at. If the summer travel season goes as I expect it to, it should be great news for Sabre. All right, guys, so that's the falling knife portfolio update here for May of 2022. And I know a lot of folks are surprised, especially younger people, that I can sit on it when it's bleeding out like that and continue to add more. And they're like, what are you doing? All your stocks are down. It doesn't matter today. It doesn't matter. I didn't put money in here that I need tomorrow, right? This has always been a long-term investment story. If I needed this money, or if I do need this money for some sort of emergency or whatever, yeah, then I'll start talking about losses and selling out of things that I just think have no future. But at least in the month of May, I can't think of too many reasons to do that. I really can't. What could conceivably happen if things keep getting worse, then you start to get to the end of the year, you start to think about tax loss harvesting, And perhaps the more ideal scenario is to sell things at a profit and match that by selling some losers to just get your tax base to zero. I could see situations like that. But for right now, all I see in this market right now is an opportunity to buy with major upside over the next 3 to 5 years. And so I'm sticking with it, and this channel will go on, haters or not, because frankly, I enjoy talking about stocks. I enjoy researching them, and I have really nothing to hide about the falling knife portfolio. It is what it is. There's no private membership groups that I need to refund. There's no stock tips newsletter, right? I'm just showing you what is interesting to me and the stocks that I want to invest in. All right, guys, let me know how your portfolio is going this year. Don't forget to check out that special offer for Seeking Alpha, link in the description. Hope everybody's having a good day. We'll see you on the next video.